Hi all and welcome to TCM Education. In this video we want to discuss one of the most hurtful events that are basically hurting day traders, and it is the FOMO event. Okay, so what is FOMO? Fear of missing out basically means that your greed is taking over your mind, and you see a stock running higher very fast. You obviously want to get on board and make a quick buck or a quick many bucks, and then you lose your compulsion and you don't have a plan, so you press the button and then things can unravel very fast. Just to make a point of how destructive this practice can be, let's take a look. This is the daily chart of Robinhood. Now if you go back to Robinhood's IPO 4 years ago, the stock was IPO'd at 40. In the first day the stock did nothing or nothing interesting, and then came the second day, and in the second day the stock started trading pretty much at 35, ended up at 83 in the middle of the day and closed at 55. You can see that this is the biggest volume bar in the stock ever. Since then the stock did not exceed the volume that it did on that particular day, which was how many millions of shares? 400 million shares were traded in that particular day. Why is it so important to look at this example? Because it took investors, in this case obviously not day traders, 4 years to recuperate that nasty crazy day. Okay, of course those who bought Robinhood at 8 and it's now sitting at 83 are smiling, but how do we acknowledge that it was a FOMO day? The volume. The volume was basically the reason why the stock traded so aggressively up and down, and you can see that days after the volume lost 90% of its volume, and basically the stock lost I don't know, interest for investors, for traders, and anybody that didn't measure its risk correctly either lost its position if it was leveraged, or needed to wait, or basically exited at one point or another with a huge loss, and maybe is now part of the recurring or ongoing quest for fresh new highs in Robinhood, but you needed to wait 4 years. And again, is this FOMO? Probably it is, but there are so many examples where day traders are getting on board with stocks that they should never been basically trading, and at prices where the risk is not really manageable. And now as day traders we are working very hard for each trade. We're trying to manage trades according to philosophy or a strategy, and what we want to do basically is make money on a daily basis, if possible on a weekly basis or on a monthly basis, because day trading is work. Okay, so you're coming to work, you're ready by 9:15 in front of your charts, or maybe 9, preparing the trading day, then working anywhere between 4 and 6 hours, and you hope that you return a profit, and if you don't earn a profit, you're working, you're probably going to quit and not do it anymore. So maybe you're going to move to investment, where basically you're not doing anything, and you buy a stock based on some research or others' research, and things can go very well or they won't. So it depends. The bottom line is that when you are day trading, you have to have a plan. Now the plan can be applied to up to a certain level, and at one point the plan, which obviously doesn't fit all stocks, unravels. Now, many of you who are following our channel know that we are always looking at the best or the biggest intraday movers, and I have a list of intraday movers in front of me that were, some of them triple digit, which means they moved intraday more than 100%. Others move as much as 700%. Others move 80%. Those numbers are unsustainable. So when you see a stock that's up 80% or 100%, you immediately, your eyes are, we are, elated, and we want to take part of this amazing move. And who doesn't want to buy a stock at 4 and sell at 20 or maybe at 30 and in our wildest dream at 100? And we've seen moves like this in, I'm just naming a couple of stocks here. SBET went from 4 to 100 plus. KWE, CYN, it's in front of us. I'll discuss this stock in a bit. NKTR this week, EYEN this week. So those are stocks that delivered huge moves in terms of percentages in a couple of days, sometimes in one day, sometimes within the same session. Now let's take a look at this example from CYN, which is a stock that we analyzed and talked about a couple of days ago. So if we look at CYN, and this is the chart of CYN, it was Wednesday. Yeah, Wednesday the stock closes. That was June 26. June 25, the stock closes at 450. Okay, it opens up at 16. So that's already 300%, and it basically blinks on all the screeners. The stock is up 300%. All day traders are now watching CYN. What happened there? They want to know what happened. More important than what happened is how you can get on board and trade CYN. And expect a stock that moved up 300% to move up another 50%, maybe another 100%. Now keep in mind, on a normal day, when you buy a stock, okay, and it moves from 20 to 21, that's 5%, okay? That's a very big winner. 5% intraday movement for a stock is a huge winner, okay? If the stock moves up 10%, so meaning from 20 to 22, that's doesn't happen very often. I don't want to say that it never happens. It happens. It will happen for you once a month if you are a very good trader, to have a 10% intraday winner and stay with the trade. So now the stock, as you can see, is moving from, and of course nobody bought it at 450 because nobody knew that this stock existed until it got on board with the screen. And I'm not even looking at the pre-market action, and sometimes the pre-market can be of help in this case. While normally I would say stay away from the pre-market when you're trading normal stocks. When you're trading these particular movers, if you are in front of the charts in the pre-market, I think you still have a better chance, but we're not going to discuss that because this is truly another topic and involves so much risk. So now you're trading, or you're trying to get on board with the trade. Obviously there are no technical patterns, the risk reward is unmanageable, and you're getting on board with the trade. And look how many people got on board with this trade once the stock moved over 20 or 24. So the stock goes from 24, and people are still buying by the time the stock breaks 40. And I don't know who's buying at 40 or 41, but obviously somebody bought it at 41. And if you're gonna take a look at the SBET chart, you'll see that somebody bought SBET, which started the move higher below $4 at $100. So those events are unsustainable. And now in the same day, okay, because this is not a monthly or a weekly like the event that we just saw a couple of minutes ago in Robinhood. this is the same trading day. Okay, that's the same trading day. That's Thursday, June 26th. So the stock basically drops from 40. What's the price here? Yeah, 41.50 at the highs to 11.30 at the lows. That's down 75%. Okay, obviously anybody that's still in the trade that didn't cash out on the move higher or bought in expectation of more upside is now it's not in deep trouble. He's done for the day, maybe for the weekend, maybe for the month, in terms of losses here, because you fight every day to make a 5% trade, okay, and that's amazing. And now you're in danger of losing 30% or 50%. And if you are leveraged, good luck with that. That's can be a catastrophic event for you in terms of losses. And most of us are leveraged. So, and again, the reaction to a big win is not as aggressive to a reaction to a big loss, which actually sends you into kind of a tilt, you know, where you don't have control of what you're doing. Most of us, after such a huge loss, will lose control and belief in trading, definitely day trading. So the idea here is, from the get-go, to stay away from the FOMO trades. Now, it's easily said than done, because we want everybody that's trading wanted to get on board with the huge winner. We see CRCL moving from 60 or 30 at the IPO to 300, and in a week it's down to 200. And you know, we see all these events as day traders. You see many events that basically are hurting you in terms of they throw you away from your routine, which is hard work and entry points and discipline. And sometimes trades don't work, and sometimes you're taking 4 trades and you're losing 4 of them in a row. It can happen, and then you cannot stop. It's your business, so you lose 4 times 1%, and then you make a 6% or an 8% winner intraday, and you break green. Okay, but again, it's hard work. The FOMO event can really hurt your overall business. Now, most of the experienced traders stay away from those FOMO events. It's not the same for newcomers. So if I can appeal to you guys, stay away from this greed. Stick to your plan, and if you don't have a plan, you need to get on board with a plan, because you cannot trade these markets in now 2025, which are the most volatile markets ever. As much as I know, and I've been in this trading business for 20 years, and it's impossible to trade without a plan. You must have a plan, and you need to see day trading as a job. It's not a very hard job. You're not gonna work outside. You're in front of your computer. You're gonna risk money, okay? That's the awful part of the job, but there is the reward that you're doing it in your free time, and you're your own boss, and you can make money. That's clearly, this is the best market ever, and I think that anybody that's not doing his homework is making a big mistake, because you're basically looking for a FOMO in the wrong place. Okay guys, I hope it was illuminating enough. If you have any comments, do, and see you in the next video, and please share this video with your friends, those who day trade, of course. Thank you.